May 20 gave the market something it needed: room to breathe. Stocks bounced, oil prices dropped, and the 10-year yield backed off after days of mounting pressure. Then Nvidia reported after the close, giving the chip trade the answer it wanted. This doesn't make the risk go away, it just means the rally hit two relief valves at the same time. Closing numbers reflected a real rebound. The S&P 500 rose 1.1% to 7,432.97. That was its first gain in 4 days. The Dow added 1.3% to 50,009.35. The Nasdaq climbed 1.5% to 26,270.36. And the Russell 2000 jumped 2.6% to 2,817.36. This wasn't some quiet defensive trade. It was a broad bounce that happened because oil and yields stopped pressing so hard. The first pressure release came from crude. Brent fell 5.6% to settle at $105.02 a barrel. U.S. crude settled near $98.26. Prices are still high compared to the pre-war market, but the direction matters. If oil stops climbing, the inflation scare feels less immediate. That gives the bond market less reason to punish stocks. A better oil signal came from the Strait of Hormuz. Reuters reported that 2 Chinese tankers carrying about 4 million barrels of oil exited the strait. Shipping monitors saw more vessels moving than they did last week. Donald Trump also talked about the chance of a deal with Iran. That combination gave traders a reason to reconsider the worst-case scenario for energy prices. The key word is relief, not resolution. Trump said negotiations were in the final stages. He also warned that attacks could resume quickly if Iran doesn't agree to a deal. Iran said it remains open to talks, while accusing Washington of coercion. The market got a better headline, but not a clean ending. Oil can fall on hope. It can also rise again if that hope breaks. Lower yields did the rest of the work. The 10-year Treasury yield fell to about 4.57% from 4.67% late Tuesday. This matters because high yields usually hit tech and growth stocks first. When the yield move cools, chips and small caps get breathing room. That explains why the Nasdaq and Russell 2000 moved harder than the S&P 500. Then Nvidia had to deliver. The company reported fiscal first-quarter revenue of $81.6 billion. That's up 85% from a year ago. Data center revenue reached $75.2 billion, an increase of 92%. These aren't just small beats around the edges. They show that demand for Nvidia's systems is still running at a massive scale. The forward number mattered even more. Nvidia guided second-quarter revenue to $9.1 billion, plus or minus 2%. They said that outlook does not assume any data center compute revenue from China. That's the cleanest part of the print. The market expected a strong quarter, but the guidance told investors that the demand curve isn't flattening yet. There is a catch. Good news has to work in a high expectation market. Nvidia was already a main pillar for index confidence, and the stock rallied leading into the report. A beat can study leadership. It can't settle the Iran talks, reopen every shipping route, or pull yields lower by itself. This was confirmation, but it isn't a free pass. The bounce involved more than just Nvidia. AMD and Intel rose sharply during the session. Small caps gained more than the big index as yields cooled. That looks healthy for a single day. It shows lower rates help more than just mega-cap tech. One strong session doesn't prove breadth is fixed, but it tells us where buyers return first when macro pressure eases. The path to failure is easy to see. If talks with Iran stall, oil can spike again. If oil spikes, inflation fears come back. If those fears return, yields can climb and hit growth stocks. If Nvidia's strong print does not translate into follow-through tomorrow, the market loses the cleanest leadership answer it has left. The confirmation path is just as clear. Watch tanker traffic through Hormuz, crude prices, and the 10-year yield. Look for Nvidia's follow-through and market breadth. Bulls want to see oil stabilize and the chip trade hold its gains. If those line up together, May 20 becomes more than a bounce. It becomes a better setup. The takeaway is simple. The rally got room, but not immunity. Oil fell because the Iran headline improved. Yields fell because the inflation scare eased. Nvidia delivered because AI demand is still massive. That is enough to help the tape for now. It isn't enough to stop watching the pressure points that shook the market in the first place.